Facebook family. Y'all come on up in here today, y'all. Listen, it is a great day to be great in the land of the great. Great is who we are, great is what we do, great is what God sees in each of you. And that would be me too. So we are super excited to get started with you all tonight. We're going to give it exactly 1 more minute so that you can get in here. Okay, it is 6:59. We started a little early, but we're going to give it 1 more minute so that you can get in here. You can get your family, your friends, and all of that in here, and you can get some valuable information tonight. You do not want to miss my special guest, Mr. Jared, because he has some amazing information for you that's going to help you in this journey. So, again, we have 1 more minute, y'all, and we are going to get this party started just like that. Just like that. So I'm gonna find me because I'm gonna share it. If I'm telling you all to share it, then that means that I have to share it. And if you all are interested in receiving a great prize tonight, because I got some prizes, and I'm also gonna do a drawing for a prize that I had for last time, then you want to get in here and you want to make sure you share the live just like that. How you doing tonight, Mr. Jared?
I'm doing great. I'm excited to be here. I appreciate you allowing me to be a part of this, and I'm excited. I love talking about home ownership and home buying and all those things included
Yes.
in that conversation. So I'm glad to be here for sure.
Yes, yes, yes. I feel the same way. And after, which we'll talk about, but after meeting you at my first home buyer seminar, I realized how much valuable information you had and how you were so resourceful and able to help people that were ready to purchase their dream home. Hello, Dr. Catrice. Thank you so much for joining. Hello, everybody that is coming in. Thank you all for joining. Be sure to like, love, share the live. As they say, sharing is caring, and that share is absolutely free. Like, we're not charging you anything to share the live. We are not charging you anything. It is free 99 to share that live. And Facebook did not like my little slow, nice, calm music that I had on in the beginning because it's already said something. But that's okay. So, with that being said, we are going to go ahead and get started. Thank you all again so much for joining. Say hello. Let us know that you are here. Also, let us know what city and state you are coming in from tonight. We would like to know that as well. So, I'm going to go ahead and get started and introduce myself. After I introduce myself, you will hear from Mr. Jarrett himself, and he's going to tell you all about him, and then we will get started tonight. So again, my name is Dr. Tanisha L. Bowman. I am with You Still Can Realty under Legacy South Real Estate Group. I am your home girl. The name of my company again is You Still Can. And if you know me and if you follow anything you know that I do, then that is my brand. I believe that all things are possible when you trust God. It doesn't matter what has happened in the past. It doesn't matter the mistakes you've made. In this situation right here, it don't matter your credit report because we're going to talk to you tonight about how to get that fixed. It does not matter. If you are still here, you still have purpose. So that means you still can buy a home just like that. Now I'm going to turn it over to Mr. Jared.
Well, I appreciate that. And yes, I agree with you wholeheartedly. You can, as long as you have breath in your body and you trust God Almighty, He can make a way, regardless of what your circumstance is. Sometimes you just got to get the right help. And that's why I'm here. I'm Jarek Maddox with Your Mortgage Mentor. I am your mortgage slash financial coach. I am here to help you walk you through the process and get you approved for a home, regardless of where you are right now. My goal, my vision, my purpose is to help you overcome any obstacles that try to come your way and help position you to be able to get approved for a home, regardless of where you start from. So that's the whole reason why I started Your Mortgage Mentor. I bring a wealth of experience. I have over 12 years in the mortgage industry and over 10 years in the financial service industry that I bring to the table. So there's not a lot of scenarios that I haven't seen or aren't familiar with that we can help navigate a plan to help get you approved for home ownership. So I am glad to be here. Please put your questions in there. No question is out of bounds if it's about finances or home ownership, and we'll do our best to get them answered and get you the information that you need. So I appreciate everybody for being here.
Awesome, awesome. Thank you so much. So you've already said something that's really valuable, and that's that you was a loan officer for how long?
I was loan officer for 12 years.
12 years. Wow. So that's already valuable information right there, which I'm sure led you into now what you're doing as far as being a mortgage coach. So you know some ins and outs about this thing and when it comes to being able to help people. So I'm excited to talk to you about this information tonight. So right before we get started, Jared, on my last live, I did do some drawings and I forgot to do the drawing. So
Oh,
I
okay.
am
Okay.
going to I am going to I'm sorry, I just got a text. I am going to draw a name really quick before we get started. Make sure I have them
Okay.
all in here for a $50 gift card. So if you are hopping on tonight, be sure to share the live, okay? Be sure to share the live. When you share the live, tonight your name will go in the drawing for a $25 gift card, just like that. All right?
Awesome.
All
Awesome.
right. So with that being said, we have for the $50 gift card. Oh Lord, they're gonna think it's rigged. Dr. Catrice. Dr. Catrice, one of my good
Awesome.
friends.
Awesome.
But she shared the live, so she gets the $25 gift card. And then we're gonna do one more drawing for a book, and that book is You Still Can. Listen, I told y'all everything I do has to do with You Still Can. And that winner is going to be Miss Jessica. Jessica, and that's Jessica Stinson. So, congratulations to Dr. Catrice. Congratulations to Jessica. Thank you for sharing the live. Tonight's book will be God Will Right Your Wrong Too, and a $25 gift card. So, when you share the live, comment You Still Can, and your name will go in the drawing, and tag all of your friends. All right,
Awesome.
so let's get started. Yes, I love to give stuff away. It's such a blessing to be able to. So, Jared, I am going to ask you a couple of questions tonight. Um,
Okay.
as you answer them, as Jared answered these questions, y'all, if you have any questions, I think he's already said it, please go ahead and comment in the chat. Also, I do see you on YouTube as well. So if you have a question and you're streaming in on YouTube, you can ask it in the chat and we will be able to answer it. All right. So, first question I want to ask you, what does it actually mean to be mortgage ready? Like, I've heard that several times. Like, okay, are you mortgage ready? Or I'm mortgage ready. What does that mean?
For clients that are enrolled in my program with your mortgage mentor, it actually means a lot more than just the maybe the standard that's in the industry. Because for me, I take that serious because I used to be a loan officer, so I know firsthand what loan officers prefer with their clients. And I'll be honest with you, mortgage ready doesn't mean you have a 700-800 credit score. It just means that you have your documents, you know how to access your documents when they're requested. You understand some of the lingo and the jargon that the loan officer is going to use when he's talking to you about buying a house or a loan cost, a loan estimate. And it just means that you're confident about your ability to be able to get approved and buy a house. And it also means that with mortgage mentor clients, that if anything comes up, we may have talked about that or practiced that scenario. So you're comfortable with, doing whatever you need to do to resolve it, fix it, and move forward with the process. You know that this is not going to be a deal breaker. You know that this is just maybe the loan officer asking for more clarification. It doesn't mean that you're not approved. It just means that, hey, I just need to provide this additional information. I get it to them and I'm good to go. So what I've seen from my clients, just to be honest with you, is I've seen an elevated confidence as they go through my program. It means that they understand the process is not as stringent as a lot of people assume it is. And as long as you do what you need to do, you're gonna get through the process and be able to get approved. So for me, mortgage ready means that you are a confident buyer. You got your credit where it needs to be to get the approval that you need. You got your money ready, or you got the down payment assistance. You know what that details, so you're ready for that. And you got your documents ready. And that's really what it takes to get that approval. Is you have those things tightened up, and you've already spoken with me, and you already kind of know what the process is.
Mhm.
I have a buyer that's about to graduate, and they're so confident about the process that it's exhilarating to be able to for that confidence to exude. And I'm just like, wow, they really are. This program really works, so I'm excited about it. It brings me joy to see a smile on their face, a virtual smile on their face, because they know they're ready to go.
Yeah, yeah. I love that. And at the very beginning, what you said, being confident. I think that's one of the things that we're not when it comes to buying a home. I think the confidence just goes out the window because it is a large purchase. It is a major life investment. So I understand that. But I think that's one of the biggest things, just being confident. And even if you've had some stumps along the way, to know that this too, as they say, shall pass, right? So I
Right,
love
right.
that that's one of the things that you say, and being confident about being able to buy the home. So hello, everybody that is coming in. I see my brothers come in. Blair Ellison, thank you for joining. I see my broker, the one, the only Keisha Kennedy, Legacy South Real Estate Group. We are representing tonight. Thank you so much for joining, and everybody that is coming in. Thank you for sharing the live. Thank you for tagging friends and family. Anybody that you know that may be interested in getting this process started. Tonight is the night. They don't want to miss this live. All right, next question. What is the biggest things a lender looks at when deciding whether someone qualifies for a mortgage? Oh, okay. I'm not sure what happened. Now I cannot hear you. Can you all hear?
I'm sorry. There we go.
Oh, there
I
you
must have
go.
hit view. So what the lenders are, they're going to look for three things in particular. One, you have to have the minimum credit score. I know you're going to ask me about what that is, so I'm not going to go into detail about that. But you got to have the minimum credit score that that particular lender requires. You have to have income. Um, you know, the times have changed where you used to be able to buy a house with no income, and as long as you have a 700 credit score, you didn't have to provide income documentation. There are a small group of loans that are like that, but for generally everybody, you got to have income to be able to qualify. So you got to have credit, income, and you have to have at least some money to put into the transaction. If you're doing down payment assistance, you still have to have some money that you have to bring to the table. If you're
Okay.
not using down payment assistance, you're going to need a little bit more than that person. But so you would credit, income, and savings are the three things that you need in order to position yourself to buy a house.
Credit, income, and savings. And I like that. I love that because sometimes I think that we forget that buying a home is just something quicker than a quick fix. And
Right.
I know we're going to talk about this because you, as a mortgage counselor, there's a difference between a mortgage counselor and people that just say, I'm going to take everything off your credit
Right. Right.
report. And then it comes back, right?
Right. Right.
But but at the same time, you are creating something here. You're leaving a legacy behind. And at some point in our lives, we got to make the decision, because I'm gonna go back to that word confidence, that we're gonna be confident in the amount of money that we can save,
Right.
right?
Right. Right. Right.
Yeah,
Definitely.
so I love that. I absolutely love that. Thank you. So, next question, and we're going right into it. What credit score do you really need? I am so interested to hear this because I have heard about these 800s all my life. But what credit score do you really need to buy a home?
So I'm gonna go program by program based. So for if you're doing an FHA loan, which is through the
Mm-hmm.
Federal Housing Administration, you can buy with as low as a 580. There are some lenders that may go to a 550. There's very few, so that's why I say 580 is the minimum that you need. Of course, the
Wow.
higher your credit score, the easier it's going to be to go through the approval process. If you have that 580, nine times out of 10, you're going to need your own down payment. You're going to need maybe even some reserves. And when I say reserves, I mean, the down payment plus after you close and you give the money that you need to buy the house, the bank is going to want to see that you have at least 3 to maybe 6 months of payments still in the bank, and that's called reserve. So, that would allow you, help you with qualifying at a 580. And then sometimes they want your debt to income ratio to be lower than what somebody with a higher credit score may allow. So, but FHA 580, conventional, typically you need a 620. VA, to be honest with you, and I've told a few clients this, VA doesn't have a minimum credit score. The Department of Veteran Affairs does not have a minimum credit score. Lenders typically have their own credit score, and most of those are 580. Most lenders usually want you to have at least a 580 to use a VA loan. And then if you're doing USDA, usually need a 620. So I would say at a minimum, you need a 580 for a majority of the programs, to a 620. That's the minimum score that you need to qualify for a house.
Wow. I just decided to go ahead and put that in the chat because I know that I have heard, totally different. And of course, now being in the real estate business, I am learning so much more. But I've heard people so many times say these crazy, high scores. And so
Right.
since people don't have a perfect credit score, they automatically remove themselves from that option. They lose the confidence when
Right.
it comes to buying a home, and now they don't even try because they don't feel as if they would qualify.
Yes.
So this is it that y'all as low as a 580. Okay. And then you talked about VA, which I know is a whole nother lie.
Yeah.
Because VA seems to be a sweet spot, and you have so many benefits that people don't realize that you have when you are VA.
Yeah.
So
I used to love doing VA loans when I was a loan officer because the veterans do get more benefits than the typical home buyer who's not a veteran and using that VA loan. So I love doing those VA loans because they were the buyer didn't if they stressed out at all, they weren't as stressed out because they weren't bringing much money to the table. The payments were lower. It was just a much easier process.
right, right, right. Okay, awesome, awesome, awesome. This is some great information. Listen, if you are coming in, be sure to say hello. Thank you so much for joining. Tell us where you are coming in from. And at any given time, if you have a question, you don't have to wait to the end. Go ahead and type that question in the chat, and we are going to make sure that we get it answered for you tonight. Okay? So, if someone has bad credit today, because a 580, that's great, but some people may not have a 580 yet. Like, let's just be real and be realistic here. So if someone has bad credit today, does that mean that home ownership is off the table for them?
No, and you can still buy a home, right? With
Yes.
so
Yes.
the answer to that question is no. You can still position yourself to buy. That's exactly why I decided to, when I decided to come back into the industry after taking a little break, I didn't want to be a loan officer because I felt like my services and my expertise were going to be more beneficial to help individuals realize that they can change their situation. Your credit is one of the things that can change in a matter of 30 days. 6 months, 12 months, you really should be able to get yourself from wherever you are, as long as you do whatever I've told you to do or the lender has told you to do. 12 months is typically enough time to go from non-approving score to an approving score. So no, you can, if you've made it, had some past issues, and we all go through stuff. So I tell my clients, don't feel ashamed of what happened in the past because everybody goes through a period of time where things are happen beyond their control. And so don't get caught up in those past circumstances because they don't dictate your future. You do. And if you trust God, we know that all things are possible
Yes.
through Christ who strengthens us. So it's
Yes.
definitely not off the table, and I would never take it off the table, for anybody that has had credit challenges, because you can always change your credit score. You can change your credit score, and you can improve your savings. The only thing that is a little bit harder to change is your income. Because sometimes you have to get add a second job or maybe get a new job, but even that can change as well. So
Yes.
you're never out of the equation, never out of the opportunity to buy a house.
Yes, I love that. So it was something that you said there. Good evening, everyone that's coming in. Good evening, Monique. I need to speak with you. Good evening, Pastor Denise. Thank you for joining. Thank you all so much for joining from all these different places. So it was something that you just said, Jared, that was so good because I remember my daughter saying this on a panel one time at one of my events, but she's an attorney and people
Okay.
were talking about how long it takes. Like, you go to school for 12 years and then
Right.
now you got another 7, 8 years to do this. And what was her motivation? And her answer to that question has always stuck with me. It's pretty much as long as you're still living, the time is still going to come.
Right.
So when
Right.
you say 12 months, sometimes people, when they don't see it right now, they don't want to wait a year. They don't want to wait 2 years, but that time is still going to come. That year is coming.
Right. 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 Right.
Yeah, the 2 years, whatever it may be, is coming.
Yeah.
As long as you have breath in your body. So don't wait a year from now to wish you would have did it last year.
Right.
Oh, I remember when I seen this live tonight, August 20th. Okay. August 20th, and now here it is, August again, 2027. I wish I would have started last year because that's
Right.
what we always want to say, where we have someone right here tonight that's telling you, listen, you don't have to come to me with great credit. As a matter of fact, that's why I created my business for the people who don't have the best credit. But what I'm telling you is that I can help you get there. So I love that. Dr. Natasha says, what if you have a home and want to purchase a home in another state? Is that possible even when you don't want to leave? Let me finish reading it. Leave your present home, asking for a friend.
Yeah. Whether it's you or your friend, yes, you can. So if you're planning to keep that home that you're currently in, then you will be considered an investor. And I actually have helped. I have a client now that's an investor. They have their home, and they want to position themselves so they can buy another home to be able to rent out or flip. And so if you have your home and you don't want to sell it, or you want to or and you want to keep it or rent it out or whatever you would decide to do, then if you're not going to live in that other home, then you would be an investor. And that process is a little bit different, not a whole lot different, a little bit different than if you were going to be living in the home. But I encourage anybody, if you bought your first house and you see how easy it is, keep the cycle going. There's no reason why you shouldn't be able to buy a second and a third home, because you've already done the hardest thing as the first one.
Yes, that is so true. You've already done the hardest thing with the first one. That's so
Right,
true.
right.
Yeah, I love that. I love that. So I hope that answers your question, Dr. Natasha, for your friend. All right. Anybody else, as you're coming in, if you have questions, by all means, please go ahead and ask. The only way it's a crazy question is if you don't know the answer. Okay, that's the only thing that's crazy about it. What are some of the biggest mistakes? I can't wait to hear this one that people make when trying to improve their credit before buying a home.
So I'm gonna be honest with you, and I have nothing against individuals who do credit repair, because, I partner with somebody who does it, and she does a really good job. But there are a lot of people out there who don't, and they're only in it to get money for themselves, and to do what they need to do for themselves. And their primary motivation isn't to help you buy whatever you need to buy. Their motivation is they want to get paid, and the only way they can get paid is by getting you to sign up, and they send you a little bit of what you need to satisfy you, but they're really truly not helping you. So the biggest mistake is just thinking that if I just do credit repair, I'll be able to buy a house, because the truth is that when it comes to buying a house, there's it's more than just credit, and that's what my program covers. We talk about the doing a budget for yourself so you can understand what the true costs are with buying a house, and making sure that you can afford a home in today's environment. So the biggest thing is just and also I would say that if you're trying to attack it yourself, and you get your credit report and you see all these collections and derogatory items, a lot of people will attack those first as opposed to attacking their current accounts, and that's a mistake, because your current accounts are weighing more on your credit than those derogatory items. So that's why you want to get really good professional help so that you can pay off the right items and utilize those resources the right way, as opposed to just throwing money at a collection account that's not going to help improve your credit score like you think it would.
Wow. That's really good, because, and like you said, you have someone that is legit, that does do things of the sort, which is great. But there are just so many people out here with so many false promises. And a
Yes.
lot of times we want these microwave blessings. We don't want to put in the work that's going to better us in the long run. We want something that's going to fix us right now. If I cut my finger right now, I could put a band aid on it. But if I need stitches, that band-aid is only going to do so much. At some
Right,
point,
right.
I have to get the stitches.
Yeah, yeah, yeah.
Yeah, yeah. At
and the
some
thing
point.
about the credit repair that a lot of people don't realize is that it's temporary, and sometimes those items can come back, and sometimes they can come back it's before you complete the mortgage purchase, and if they come back before you close, and that could prevent you from qualifying. And now
Yeah,
you've paid the money, you've gone through the process, you paid an appraisal fee, you paid earnest money, and that item came back and reduced your scores. And now that not only have you wasted your money on the credit repair, but also the mortgage transaction or what you paid for the transaction, you may not be able to recoup. So that's why I just say, be really careful about these promises about the credit repair, because a lot of times they don't do what they say, and then if they did, it is very, very temporary.
yeah,
um Very
yeah,
temporary.
yeah. I love that. And as you were saying that, Jared, I was thinking, what if you do get in the home and the stuff comes back and they garnish you? And now
Right,
you don't have money to pay for your home, you
right,
know
right, right,
like so many things can happen with that. So what I've learned through this process and being a realtor in this short amount of time is, hey, focus on restoration versus a quick fix. Let's
right,
do this right, because
right.
things are going to come up, and we're going to talk about that. But other things are going to come up when you're in your home, other things are going to come up in your life. So now, if you learn how to properly manage your money, you're going to be prepared for the things that's going to come up, because life is going to happen.
Oh yeah, for sure.
It's going to happen. So, how much money should someone realistically have saved before they start looking for a home?
So really, that's going to depend on the type of house that you're buying. But I would say if we're looking at a number and you're not doing down payment assistance, but for most of the homes that in the market that we live in, I would say a good number is somewhere between $8,000 to $10,000.
Eight to ten
If
thousand
you can,
dollars.
if you have that in the bank, you're off to a really good start. And also, not even just your bank account. A lot of people don't think about this, but your 401k can really be a good resource as well. And if you've been on your job long enough, a couple of years, you probably have enough in your 401k to buy a house.
Yeah, that's good. And you know what, Jared? Let me just help the people out that's scared a little bit. Because if you feel like, oh, I don't make that much money to save that much, if you don't make a lot of money, which is okay, nobody's judging you for that, but you get a good income tax check if you don't make a lot of money.
Right?
Okay.
Yeah, definitely, definitely. Yeah, that's
Ask me
that's
how I
more than
know.
at least five, six, seven. I've seen as high as 10,000.
Yes, yes.
Yeah.
So we just got to make decisions, okay? And I'm not saying this to judge or talk about anybody. Hey, Kanisha, hey, Sissy. I'm not saying this to judge or talk about anybody, but we got to make decisions. If you've made the decision, I want a home, I want to be a home owner, then you know what? I'm going to have to make some sacrifices. So I know this is what I'm going to get when I get my taxes. This is going to be the best time for me to provide that cushion that I need to provide to get this process started, because other fees are going to come up, which we're going to talk about. So, hey, you know what? I'm going to do this. Now, on the flip side of that, I want to know, is it possible to buy a home with little or no money down?
Yes, it is still possible. There are down payment assistance programs out there that will
Mhm.
allow you to be able to, have majority of all your down payment covered through the down payment assistance program. And so the only money you may be coming out of your pocket with is maybe an appraisal, which can be anywhere from $500 to, maybe 750, and sometimes earnest money that and that's something the seller's going to ask for, to go to secure the contract on that home. And so that could be anywhere from 1,000, 2,000, maybe even 3,000. So that money is needed up front, and that's going to
Yeah.
be money that's going to be needed before you even the program is going to approve anything for you. So I would say at a minimum, at least the appraisal you would need. Because sometimes, I don't, if you got an all-star realtor and they negotiate a contract with no earnest money, then you may not need that. But you would definitely at least need the appraisal and the inspection, which could be
Okay.
about $300. So, $850 for the appraisal and inspection, and I would say maybe 1,000 to 2,000 for earnest money is
Right.
typically what you would have to have up front. And
Okay.
then with the earnest money, sometimes if the program approves you for the assistance and the costs end up being less than what the program gave you, you can get that earnest money back.
Get it back. Yes, absolutely. I love that. Cut the check and get it right back, right? Hello, Andre. Andre says reinvest that tax check. Absolutely. Hello, Unica. Thank you all so much for joining. So, and we kind of just talked about that, the other costs that may come with it. You have your appraisals, you have earnest money, you have your inspections and things like that. So you definitely hit on that. But how does debt to ratio income affect how much someone can qualify for?
I'm sorry, what was that?
How does debt to ratio income affect how much someone could qualify for?
Yeah, so that's basically directly how the lenders determine how much you qualify for.
Okay.
So you could make $200,000, but if you have a lot of debt that you're carrying, you may not be able to qualify much when it comes to a home compared to somebody who makes $60,000 and they have no debt. So your income to debt ratio is going to determine how much house you can afford, and the lender's going to utilize that to make the calculation of what your amount's going to be able to qualify for. So that's a really important factor that they consider in how much you can qualify for,
Mhm.
and that's something that we talk about a lot in your mortgage mentors. What your debt to income ratio is, what that dollar amount is, that because how that impacts how much you qualify for, and we talk about that early so that ahead of time what that number is.
Yeah, yeah. That's really good because now the reels and things that are kind of funny that realtors does make sense when the person is trying to qualify for a house and they go out and buy a new car. And it's like, whoa, wait, what just happened here? Like you just bought a whole new car and you're trying to qualify for a home. So that just affected your debt to ratio. So okay, I understand that now.
Yeah, I'll tell you a story real quick.
Yes.
When I was initially doing loans very early on when I started, I was an assistant and I was just taking applications. And I had a buyer that I was talking to, and I pulled her credit report, and I saw a $1,200 payment. Now this was probably about 10 years ago, so $1,200 payment was a lot, and I
Yeah.
thought it was a mortgage payment, but I was surprised to hear that it was actually a car payment. She had just bought a BMW 750.
Mm.
And so I told her, I was like, and she had a good job. She was making about $60,000. But I told her, and she had just bought it like a month prior. And I had to have that hard conversation with her. I was like, you know what? She had a 700 credit score. She had money in the bank. But unfortunately, that car note really messed her up from being able to buy a house. And I told her, I was like, you bought your house when you bought the car. If you would have just waited to get
Wait.
that house first, you could have had the car, because they don't look at ratios like mortgage companies do. So that was
Yeah.
the one experience that I will never forget when it came to somebody buying a car and trying to buy a house after that.
Wow. Wow. Well, lesson learned. Listen, we I know that's right. Now I listen, this may be one of my favorite questions I'm about to ask you next because I know this is what a lot of people deal with and this is what stops them from trying. But if someone has student loans,
Uh huh.
collections, charge-offs, or late payments, can they still qualify for a mortgage?
So I will tell you this: sometimes with late payments, if you do have a lower credit score, the system that approves you may have a hard time giving an approval if you've had a late within the last 12 months. If it's longer than 12 months, sometimes it doesn't weigh it as much as a late that was within that 12-month period. But if you've had a charge off, like a repossession on a vehicle, or even like an apartment repossession, that doesn't prevent you from buying a house. because that charge off has already happened. The bank has charged that debt off, and so the lender won't. They'll ask you. They may ask you for an explanation, but that won't prevent you from buying a house. And during my time as a loan officer, I closed plenty of loans with buyers that still had collections, charge offs still on their credit report, open, and we didn't have to pay them. We didn't have to make any payment arrangement. They were able to get closed even with those collections and charge offs still on the credit. And FHA and VA are really more forgiving to those types of things than maybe a conventional loan.
Wow. Wow, that's good. And see, even with you saying that, because like you said, 12 months. So even if for whatever reason with the payment, you're talking about a program that you can take them through and it may take 12 months, but that 12 months is going to happen.
Yeah.
But it does not automatically mean it's going to stop you. So that is good. They said they would tell us don't buy anything until the process is done. You
Oh
better say
yeah.
so the day after.
Oh yeah. Definitely.
How long would you have to? Okay, so this is a question. How long would you have to wait if you had a foreclosure?
So foreclosure, typically you got to wait at least 3 years.
3 years.
3 years to buy if you have a foreclosure.
3 years. So in that, so I love that because in that 3 years, now you got a little bit more time to get your
Right.
credit straight.
Oh
So
yeah,
now,
definitely, definitely.
yes, I love that. Great question. Thank you for asking. So 3 years is gonna happen because
Yeah.
those 3 years are gonna come.
Right, right, right.
Look, here I go. You might need to call me. No, I'm just playing.
And I'll say this: if you have a specific situation like a foreclosure or a bankruptcy where you're waiting on a certain period of time,
Mhm.
those are the clients who like if you know I've looked at your situation and everything else is ready to go. We're just waiting on that time to elapse. Sometimes you know how they have those lease purchase options. That could be a good remedy because you know that once that time for once that bankruptcy clears that 3 years, I mean the foreclosure clears the 3 years, or the bankruptcy clears that 2 years, you'll be able to buy. So a lease purchase is smart to do as long as you got everything else in order in those particular situations.
Yep. And I love that. I'm so glad you said that because I've just connected with an amazing lease to purchase option, program for people. So that is something great because, like you said, now at least you're still in your home, you're working your way up to the process. And when that 3 years come, then you're ready. So I
Right,
love that.
right.
Yes, yes. Thank you for I'll fix things while waiting. Yes, fix things while waiting or look into the lease purchase. But if even either way, even if you look into the lease purchase, then you still want to be fixing things while you're
Right,
waiting. So
definitely.
that's why you want to get with Jared. And I'm going to make sure I send you, he's going to give us all his information, but I'm going to make sure, Kanisha, I text you his information because he's really good. Just a really quick testimony. One of my clients that I'm working with right now literally just texted me. Maybe it might have been a week now, I'm not sure, but she was so excited because her score is now up to a 619 and she's
Wow.
been working with you.
Yeah.
Yeah. So that was like, she was so excited and I was excited for her, but she was, and I mean, like she sent me the whole screenshot of the credit score. She's like, my score is
Hey,
like
we
a six.
we gotta appreciate those wins for sure because
Yes.
they and that's what's motivating for a lot of clients is when they see those increases.
Yes.
It pushes them to, okay, what more can I do to improve my situation so I can buy.
Yes, yes. And of course, I would never say her name, but what I will say, I think this is so special to me, Jared, because this is a single mom.
Mm.
This is a single mom out here trying to figure this thing out who's finally got the confidence to
Yeah.
buy a home. And so she was able to connect with you. And now here she is pretty much almost ready at this point,
Yeah, yeah, definitely.
Yeah. So exciting. All right, y'all. We are almost done. We have a few more questions to ask tonight. Um, how does changing jobs, becoming self-employed, or having variable income affect mortgage qualification?
That's a great question. So for if you're changing jobs, if your salary slash W-2 and you change jobs to a similar pay where you're going from salary to salary, sometimes that's not that difficult. And the lender can work around that, much easier than if you go from W-2 to self-employed. That's the worst transition because normally banks are going to need at least 2 years of tax returns showing your self-employment income to be able to use that to qualify you. So I always, if I have a client that's thinking about, starting a business and wanting to buy a house, we have that conversation, and I let them know, like, if you go from W-2 to self-employment, you're going to be waiting those 2 years to have the two tax returns, because that's the only way they're going to be able to use your income to qualify you for a traditional loan. Now, there's some non-traditional loans, like a bank statement loan, where they're not looking at they're looking at your deposits. And so sometimes that can reduce that time to 12 months as opposed to 2 years. But that transition from W-2 to self-employment usually requires about a 2-year period where you have enough tax returns.
Yes.
So
Okay.
always
That's
think about
good.
that when you are, thinking about going to self-employment and you are W-2. I say buy the house before you do that. Just like, buy the house before you buy the car,
Before you
buy the
buy the
house
car.
before you start your business, because it'll be much easier to calculate that income when you are W-2 and you got those paycheck stubs.
Okay. Okay. That's good. How can someone determine monthly mortgage payment they can comfortably afford versus simply what the lender says they qualify for?
So one of the things that we do with your mortgage mentors, our second session of meeting together, we actually go through and we do a budget to determine how much you got coming in, how much you got coming out, and we see how much of a mortgage payment we can actually fit into your current budget. And so that same client, if you go to the lender, they may qualify for a $400,000 or $500,000 home with a 2,500, whatever that payment is. But when you look at their budget, they don't have room to be able to fit that payment in there without trying to figure out what can we get rid of to figure out that payment. So sometimes I've in consultations with clients, I've had to be like, I'll give you an example. I had one client that didn't have a lot of wiggle room, but I talked to her. She had a child that was in private school that she was paying for monthly, and I was like, "Are you possibly considering when you buying the house, when you buy the house, um, your son going to public school instead of private school?" And she said, "Yeah, that's something that I've highly considered." And so I kind of took that situation and that information. I said, "Well, to be honest with you, in order for you to be able to realistically afford this home within your budget, that's what you would need to do until you get a pay raise or whatever your income changes." And so she took that information, and now that she knows that that's what she's going to do, it's less scarier for her when the lender says, "Hey, you got a payment of $2,000," because she was already paying $1,800 to go towards her child's tuition every single month. So
Mhm.
those are some of the things that we talk about when we meet together. It's just we strategize and we figure out a way to make it happen.
Right, right. That's good. That's really good. And that's really good for me to hear, Jared, because I want the lender, I want to be approved for $800,000 home, even though that might not be realistic for me, but that's what I want. But you're
Yeah.
telling me I need to make it make sense, right?
Right. We got to make it because we want you to keep the house. We don't want you just
That's right.
to have to experience the joy of walking into the home the first day. We want you to experience that joy 10 years from now when your home is doubled in value
Yes.
because you live in this great city of Atlanta, and so many people are
Yes.
coming here.
Yes, not just post my three pictures on social media and
Yeah,
then be
yeah,
gone,
yeah, yeah.
right? Okay, okay, I got you, I got you. So when should someone start working with a mortgage professional and a real estate agent if there is a such thing as starting too early? Like, is there such thing as like you starting too early if you're not ready right now? Like, when should you start?
For me and my clients, it's never too early. It's never too early to start, because if there's something that we need to figure out and we need time to figure it out, then time is going to be on our side. But if you come to me 12 months and we have 12 months before your lease is up, then we have 12 months to make sure you have this thing, lock barrel, like you know everything about buying a house that there is to know. And you could be ready 3 times over. But if you come, your lease is up in a month and you come to me, but there's still something that we're waiting to happen that's going to take 3 or 4 months, then time doesn't work in our favor. So the sooner you start, the better. And even if you are ready, there's nothing wrong with going and applying for a mortgage to see if you qualify, to see what the payment's
Yes.
going to look like, to see what the numbers are. A lot of people are afraid of increase, but in the mortgage industry, you're allowed to apply for credit. You're allowed increase before they affect your credit negatively. I say rule of thumb for me is what I've learned from dealing with credit for so long, is that typically you're allowed about 3 to 5 inquiries before they start impacting your credit score. And
Okay.
if you're shopping, lots of times if you're buying a car or a house and you're applying within that a 45-day window, those inquiries will count as one inquiry when they go in to calculate your score because they know you're shopping for a product.
Oh, that's good to hear, and I'm sure that's good for you all to hear out there because a lot of times you do be afraid to apply because you're always going to take my score down. You know, that's what you
Right, right,
automatically
right.
assume. So that's good to hear.
Yeah, don't be afraid of credit because these companies get paid to report information to the credit report.
Yeah.
So they're not going to ding you to an excessive level because you don't you're applying for stuff. I think a lot of people don't do it out of fear because they don't think they're going to get approved. But if you don't get approved, at least you know where you stand and you know what you can do to improve your situation. So don't be afraid to apply, even if they tell you you can't do it, because that's what I'm here for.
Right.
That's what Mr. Niche is here for. So we can give you the
Yes.
advice that you need. So you can, flip your situation so you can still buy and be
Yes.
positioned to be able to get approved. So don't be afraid to
Yes.
apply. If you know you're below a 580 or a 550, you may want to come to me first, so that way, we can get a plan together in place. But if you don't truly know and you think you're in the 600s or high 500s, go ahead and apply and
Go
see what they
ahead.
say, so that way you can get a complete idea of what your situation looks like and know what you can do to improve it.
Right. That's good. And I think you just answered my last question, which is for someone watching tonight who wants to become a homeowner but doesn't know whether they're ready. What is the first step that you would recommend?
So the first step is I mean, you could definitely come to myself, but
Yes.
when I was a loan officer, I would always tell buyers just apply and find
It's
out what's going
apply.
on.
Yes.
Because if they tell you no, that doesn't mean forever. It just means right now there's some things you got to work on. You got to get some help, which from someone like myself, and we can get
Mhm.
you turned around. We can get you in
Mhm.
a position to be able to buy. So apply. Don't be afraid. Information is your best friend. The more you find out, and the sooner you find out, the better position you are, and you have more time to be able to improve your situation. So don't ever be afraid to find out information about yourself. You know,
Right. Right.
fear
That's
does not
really
allow
good.
fear to dictate. What you can and can't do.
Yes, do not. Okay. God has not given you a spirit of fear. They say just apply. Kimberly Ellison, great information. Hello, mother. Yes, that is great information. So, really quick, because this has been so good, Jared, I think I want to have a little fun tonight, if that's okay with you.
Definitely, let's do it.
Let's do it. All right. So, we're going to do what we call rapid fire. And I'm going to ask you a question. And I just want you to say true or false. Okay. Right away. I don't want you to think of like just go right in. Okay.
Okay, gotcha.
All right. You ready? All right. You need 20% down to buy a home.
False.
All right. You need a 700 credit score to apply.
False.
All right. If you have collections, charge-offs, or credits, you can't buy a home.
Utterly false.
Oh, I love it. I love it. I love it. You should wait until you're completely mortgage ready before talking to a lender or realtor or a mortgage coach.
False.
False. All right. If you've been denied mortgage once, you probably need to wait several years before trying again.
False. False. False.
False, false, false. Uh-oh, I got a bonus for you. If the
Uh,
lender approves you for $400,000, does that automatically mean that you should get a $400,000 home?
False. Please don't do that.
False. I love it. I love it. I love it. Listen, when I tell you my mom is over there tickled pink because she knows I want this $800,000 home that she can't understand why I want it. It's like that
Right,
don't
right,
make sense
right.
to her. And I'm like, if that lender tell me I can get 800,000, I'm going for.
Yeah, yeah, yeah. But you know what? Look, listen, because God can do all that. He can provide us with that $800,000 house. So
He
sometimes,
can.
as opposed to praying for that $800,000 house, God bless me with the income to be able to afford that
You
$800,000 house.
better
There
say
we
it.
go.
Yes, you better say so. So listen, look at her over there making faces. Hello, Rashay. Thank you for joining. This has been absolutely amazing. I want you to tell our people out here how can they contact you? How can they get started with you?
Yeah, so you can go to my website, and you can schedule a free consultation, and we'll talk about your situation and talk about whether you're a good fit for your mortgage mentor, and I'm a good fit for you. And that's at yourmortgagementor.info. That's the website you can go to schedule that free pre consultation. and we'll talk and we'll figure out, how we can make this work. You could call me on my cell phone or text me on my cell phone at 404-242-1420. Or you can reach out to Miss Tanisha. She knows how to get in contact with me. I definitely would recommend her or myself. We can get you plugged into the right direction and get you the right information.
Absolutely, absolutely. Hello, Shay. Thank you for joining. So, listen, y'all. Again, what Jared does is he helps you get ready to get to the lender. Okay, he helps you get ready to get approved for that home. He is your mortgage mentor, so he's going to mentor you and guide you along the way. All right. So if you feel as if you're not ready, if you feel as if you can't do it right now, then you want to go ahead and you want to get with Jared. Okay. Contact me. All right. Because I'm going to assist you too, but you want to get with Jared so that he can get you there so that I can get you in a home just like that. All right. So thank you so much, Jared, for this call tonight. I know that it won't be our last one. I
Oh
know that
yeah.
several of you will be watching the replay. By all means, if you have questions, go ahead and ask them in that replay. We will be able to answer those as well.
Well, I appreciate you having me. I enjoyed it thoroughly, and I am definitely looking forward to helping those individuals that are on the call tonight, and anybody who watches the replay in the future, and anything you decide to do with me, or any Q&As. I am always down, and I truly appreciate you and your heart and your dedication to helping, your clients and helping whoever you come across make this happen. Because you can still buy a home. Remember that.
Yes, absolutely. You still can buy a home. Thank you all so much. I want you to have a great, wonderful, awesome, blessed night. Why? Because you deserve to, okay? Bye bye.